Thanks for joining the third quarter review from Horizon Investments. My name is John Drozel, and I'm joined by our CEO, Robbie Cannon. Welcome, Robbie.
Hey, thanks, John.
Well, we've had a busy summer. We traveled the country, talked to advisors from all over the country, and we keep hearing from the industry that the value of a financial advisor is three things: relationship management, investment management, and the planning process. How do you react to that?
You know, it's funny because let's first say that in all my time in the industry, this is the most important time for financial advice. If you just even think from a demographic standpoint, the amount of retirees that are trying to figure out their retirement, this is the most important time. That said, I think there's an agenda behind reducing advice down to three things, and really that agenda is to commoditize it.
It's funny when you talk about the agenda. There's a very large asset manager in the industry that is trying to diminish the value of advice to about 30 basis points. What do you think about that?
Yeah, I mean, I really think as we talk to advisors all over this country, I think it's insulting and demeaning. It's a reductionist argument. It's like a person whose body, mind, and soul, if you take one out, you don't have the person. And so to reduce something down to three things, as you stated, really doesn't describe the whole amount of services from a financial advice standpoint and from a customized plan standpoint to an individual. And it really does try to commoditize the value of personalized advice, and I just really don't think you can do that.
Yes, I would agree. And I would urge all the viewers to link in with Robbie to read his article on the value of advice. It's been very well received in the industry. Thanks, Robbie.
Hey, thank you.
I'm now joined by our Chief Investment Officer, Scott Ladner. Welcome, Scott.
Hey, thanks, John.
Scott, there seems to be a fair amount of angst in the market right now, and there are a few topics that seem to keep popping up. The Fed, the election, China. What are your thoughts?
You know, we've been dealing with China and the Fed for quite some time now. The election is a little bit of a newer one, so let's address that one first.
Sure.
The fact that Elizabeth Warren is ascendant in the Democratic Party right now is a little bit troubling for markets, and as it should be. Her agenda would be troubling towards equity valuations and earnings prospects, and so that is something that we're watching right now, but it's really difficult to handicap until it becomes clear that she's going to be the nominee. A wild card in that picture, though, may be somebody like Michelle Obama entering the race. That would be a big surprise. It would have to happen before Christmas, but it would be a big turning point for those markets. So if either something like Obama comes in or Biden kind of reclaims the nomination, that would be taken very well by markets. But a Warren nomination would lead to some angst and some troubling price action for a little while until we became clear what the ultimate outcome would be.
Okay. Let's pivot to the Fed. What are your thoughts there?
Yeah, so the Fed has been, really since the January pivot of Powell, they've been pretty consistent in their communication. You know, the story of the Fed in 2018 was a lot of confusion. Their actions and their talk, and when they come out and speak, they didn't seem like they had a real good bead on what was going on in the economy. That's changed this year. They've been pretty consistent in what they've said, and we should remember that we need to watch what they say, and not necessarily the dots. Those dots are what they project their Fed funds to be. It's been a really bad indicator for the last 3 years. They've just been consistently too hawkish. But in communication, when they give speeches, they've been very dovish in those speeches, and they just said, "Hey, listen, we'll be here if we need to be. We're not gonna necessarily cut in a terribly preemptive fashion, but we are certainly going to be there if the economy worsens." So that's going to be helpful.
And let's also circle back to China. I feel like it's the topic we can't get away from. What are your thoughts on China today?
Yeah, I mean, it is. China has been the defining thing of Trump's presidency thus far. It is something that has caused the market a lot of angst, both on the upside and the downside. Right. High-level talks are starting again next week. They're going to be the ones to watch. We do expect some sort of truce kind of outcome to talks like that, where we're going to get a rollback or a delay in the announced tariffs, because we do think that it is still in both parties' best interest to get a deal done. The evidence of that right now continues to be if Trump did not want a deal, President Xi would have a Twitter nickname. And if China didn't want a deal, their currency would be materially weaker than it is right now in order to blunt the effects of the tariffs already. So we do think that both parties are working towards a deal. It has just been maddeningly slow and kind of herky-jerky in terms of the action.
Thank you, Scott.
Thanks, John.
At Horizon, our mission is to empower the advisor. We're a goals-based manager. We connect product to planning. If you'd like to learn more, please call us or email us, and consider following us on LinkedIn. We're grateful for your partnership. Thanks for tuning in.